What if you could peek behind the curtain and see where the world's largest asset manager is putting its money right now? Today, we're going to uncover 5 powerful companies that BlackRock has been quietly loading up on, and what that might mean for the rest of us. Some of these are household names, others might surprise you, but all 5 could play a huge role in shaping your portfolio this year. Stick around because the most unexpected pick is saved for last. Hey everyone, I'm Robert, and welcome back to The Alternative Investor, where we break down the moves that matter and help you stay ahead of Wall Street. BlackRock, with over $10 trillion in assets under management, is often a leading indicator of where institutional money is headed. By analyzing their latest 13F filings, we've identified 5 stocks they've been quietly accumulating. These aren't just small ads. We're talking about billions of dollars in fresh capital flowing into some very strategic names. Let's break it down, one stock at a time. Apple, the powerhouse they're not letting go of. Despite Apple already being one of the most heavily owned stocks in the world, BlackRock just increased their stake by over 16 million shares. That's roughly an additional $3.7 billion committed to a company that's already sitting near the top of their portfolio. What does this tell us? It says BlackRock sees stability and long-term upside, even after Apple's massive run-up. It also signals that the firm believes Apple's upcoming AI integrations and ecosystem expansion could unlock even more shareholder value. The move isn't flashy, but it's a calculated reinforcement of one of the strongest moats in tech. Next up is Amazon. BlackRock added nearly 15 million shares in the e-commerce and cloud giant, totaling close to $2.8 billion in new capital. The timing of this move is key. Amazon recently began showing signs of reigniting its profit engine, not just through online sales but through AWS and new AI-driven services. Institutional investors don't just follow momentum, they anticipate inflection points. And this level of investment suggests BlackRock believes Amazon is entering a new growth cycle, one that the market hasn't fully priced in yet. Microsoft is another tech titan that BlackRock isn't done with. They recently acquired over 7 million additional shares worth around $2.6 billion. Microsoft's deepening partnership with OpenAI, continued dominance in enterprise software, and growing cloud footprint make it one of the safest and most strategic AI plays on the market. And BlackRock knows that. This isn't just about riding the AI trend. It's about anchoring their portfolio with innovation that's already paying off. When institutions make moves like this, it often signals sustained confidence in both management and long-term vision. Now here's where things get interesting. BlackRock has massively increased its position in MicroStrategy, which recently rebranded as Strategy, by more than 14 million shares. That investment is worth over $4 billion. Why would the world's largest asset manager pour that much into one company? The answer is Bitcoin. Strategy holds billions in Bitcoin on its balance sheet, and BlackRock's move looks like a highly leveraged bet on crypto's institutional future. With spot Bitcoin ETFs now approved and traditional finance finally embracing digital assets, this investment could be BlackRock's way of front-running a major macro shift. Finally, we have Marathon Digital Holdings, one of the biggest public Bitcoin mining companies. BlackRock added nearly 4 million shares here, bringing their total position to around $620 million. That's not small money. It tells us they're not just interested in holding Bitcoin through Strategy. They also want exposure to the infrastructure behind it. Marathon has been rapidly expanding its mining operations and improving efficiency, which means they could benefit even more than Bitcoin itself during bull markets. This is BlackRock betting on both the asset and the picks and shovels behind the scenes. So what do all 5 of these companies have in common? They're all dominant in their sectors, positioned for long-term growth, and increasingly tied to the AI or crypto revolutions, 2 of the biggest themes of this decade. BlackRock isn't trying to time the market, they're positioning early and with conviction. And if you're a retail investor trying to get an edge, understanding where institutional money is flowing can be one of the most powerful tools in your arsenal. If you found this breakdown helpful, do me a favor. Hit that like button, subscribe to The Alternative Investor, and drop a comment letting me know which of these stocks you think has the biggest upside this year. And if you want more breakdowns of where the smart money is going next, make sure to stick around. We've got plenty more coming your way.